Hello everyone, this is today's video analysis for April 2nd, 2019. Today we're looking at the USDCHF, the US dollar, versus the Swiss franc for today's trade analysis. Now for the sake of time here on the daily time frame, I've actually highlighted a lot of things with circles that we want to talk about in today's video. First off, over on the right hand side, we could see over the past couple of weeks we have had a pretty significant push lower, a push down here on the dollar franc from the 1.01 level up here, pink zone at the very top of the chart. We saw resistance there. Market turned back around, went all the way back down here towards the 99 level, 99.20 being the bottom of the blue zone at the bottom of our most recent support. We've been studying in the live trade room the two different moving averages, 100 period in the green moving average, 200 period in the blue moving average, and how the market's been bouncing around in there for the past week or so. But now we see a market changing a little bit and pushing back higher and pushing now above the green zone. Specifically, if we follow the green zone back in time, a couple of things to think about here. First, black circle support. Red circle we'll talk about here in a minute. Blue circle resistance. Black circle back here on the left support resistance. Again, red circle we'll talk about in a minute. Black circle resistance. So we see a lot of resistance and support along that green zone. That's pretty much what we've seen for the past 4 or 5 days. Resistance underneath that moving average in that green shaded area. Today we see the market challenging above the green zone. So if we look at the two red circles, we know that if the market's successful in breaking through the green zone. Again, it's not a guarantee because if you look at this wider black circle back here on the left, it challenged it multiple times and turned around and went back down. So while it's not a guarantee that it's going to break the green zone, we know that if it does, and both red circles show us this, if it's able to successfully get through the green zone, the next resistance is the yellow zone. So what we're actually looking for is, if we're going to go long, if we're going to buy, we need clues and evidence that it's going to actually break through the green zone, 99.90, maybe even call it 1.0, and go all the way to 1.002545, the yellow zone, or perhaps even the pink zone at the very top of the chart. And the risk in that scenario, if we decide to go long above the green zone, is that it turns around and gets back underneath it. So I really, the first thing is this caution of this longer black circle over here on the left. We see multiple times during that circle where the market was able to get above but unable to stay above. Let's zoom it in on that a little bit. Right here, the black circle right in the middle. You can see 1, 2, 3, 4, 5, 4 or 5 times where it got above the green shaded area and then suddenly turned back around and went in the other direction. So we want evidence that it's going to stay above the green zone and not be a false breakout like it did back here. So we bring it back to current time. We look at the current candle and say, well, it's above it, but is it staying above it? That's the real key point to all of this. Is it going to stay above it and continue to go higher, or will it suddenly, by the end of the day, flip back around and get back underneath? Let's take it down to the 4-hour time frame, and as we get down here to the 4-hour time frame, we can see that we're already above it here on the 4-hour, and as we sit above it, again, we're beginning looking for confirmation, evidence, clues that it's going to stay above 99.90 and continue that upside pressure. For me, it's always going to be about an open and close. I need a good candle body above that resistance before I'm really confident that it's going to stay above here. Of course, we have news this week out of the U.S., some minor news out for the franc, but mostly out of the U.S. Big news this week, non-farm payrolls towards the end of the week. But again, we need evidence that it's going to stay above this green zone. Then, once it does, we begin looking for opportunities, maybe even a touch back towards the green zone as support before we see that continuation higher. Again, the risk right now, stop losses would be below the green zone. That way, if it turns back around and goes back in the other direction, you minimize the risk to your trading account. So what we're looking for is the market to get above, stay above the green zone. Preferably, I'd like to see it stay above on the daily time frame, but here on the 4-hour, it is already there. And we'll look for it to rally to 0025.45, the yellow zone, or higher, potentially even higher to the pink zone, 0090. 1.0090, and the risk is it gets back under the green zone. So that's the risk. And selling right now, really not part of the scenario unless or until we see some evidence of bearish pressure. If we were to suddenly see a red candle, a bearish candle push back underneath that green zone, that's kind of the opposite of what we're talking about with the blue candle, isn't it? The blue candle tells us it's a breakout. The red candle would tell us a sudden infusion of sell orders and the market reversing on the dollar franc.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.